Today, the oil market is showing weak dynamics, which is close to neutral. Perhaps the recent oil rally was too rapid. The ruble stays almost unchanged against the US dollar. However, the ruble bulls still aim to break through the 73 level. Oil has surged to new highs since March on expectations that the mass vaccination program will boost fuel demand recovery. Brent is still holding near $50 per barrel and is fluctuating in the narrow range. The start of widespread vaccination supports the oil quotes. The US is expected to approve another vaccine, this time from Moderna, by the end of the week. Besides, US lawmakers have made substantial progress in negotiating a new stimulus package of $908 billion to support the US economy. Market participants continue evaluating this positive factor, but with less enthusiasm. On the flip side, investors were disappointed by the crude oil supply data from the API. The report showed that oil stockpiles rose by 2 million barrels last week. In addition, the energy market will face more challenges in the short term. Among them is the high rate of virus spread in developed countries and increased oil output from the OPEC+. However, investors tend to downplay these negative factors, which is quite usual in the peak of an uptrend. Brent oil futures contract with the nearest expiration was trading at $50.70 per barrel in the morning session, while WTI settled at $46.50 per barrel. In the course of the session, oil is likely to stay near the current levels. Brent is expected to hold within the range of $50 and $52. Later in the day, traders will focus on the official industry data from the U.S. Energy Information Administration. Analysts predict a drop by 1.9 million barrels. Currently, the energy market sees no strong drivers to continue the rally, so oil may enter a correctional decline in the coming days. Brent futures may even fall below $50 per barrel and trade in the channel of 48.49. The ruble opened the day without major changes. Investors await the results of the Fed policy meeting later on Wednesday. Positive factors are currently offset by the coronavirus crisis. On the other hand, the start of the tax payment period may help support the Russian currency. The last auction on federal loan bonds ahead of the Bank of Russia policy meeting on Friday may be of interest to local market participants. The dollar-ruble pair keeps trading near the level of 73. Experts note that the US dollar is about to enter a sideways channel. The ruble, meanwhile, is still heading for the upside, although there are no strong reasons for this. The rise in oil prices may contribute to the strengthening of the ruble. In this case, the dollar-ruble pair will again try to break through the 73 mark. The pair is likely to stay in the channel between 73 and 75 rubles per dollar until the end of the week, with further attempts to break through its lower boundary. The escalation of geopolitical tensions or a deeper pullback in oil may change the ruble's trajectory at any moment. The US Federal Reserve is unlikely to introduce new stimulus measures today. If the regulator announces its plans to extend the bond buying program, risk appetite will surely improve. Then emerging market currencies, including the ruble, will gain a new bullish momentum. That's all for now. Thanks for watching and stay tuned.